This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
In or out? With stock markets around the world powering higher, is now the time to stay in, stay invested, or get out of stocks? We'll speak with Fidelity's head of retirement and investment strategies, John Sweeney.
Hospital sticker shock. Why do hospitals across the country charge vastly different prices for the very same procedure?
On the front lines, we'll take you inside the computer lab where a cyber war is being waged against sophisticated hackers in order to protect businesses and you. We have all that and more tonight on Nightly Business Report for Wednesday, May 8th. Good evening, everyone. Tyler, I overheard someone the other day saying, will the stock market ever go down? It sure doesn't look like it.
It never will. I know. It absolutely will. We just don't know exactly when. It does seem right now, though, like nothing can stop Wall Street's bulls from pushing this market higher. In today's sessions, gains were modest, but they were enough to send the Dow and the S&P 500 once again to fresh all-time closing highs. The Dow was up 49 points today. Record there, 15,105, NASDAQ adding 16, and the S&P, it was up 6 points. Helped by some encouraging data on housing and on another round of strong corporate earnings. More about those a little later. So what does the recent run-up in the markets and rising prices for stocks mean to individual investors like you? Jane Wells tells us how some investors are weighing whether to get into the market or maybe take a little cash out.
The markets are high and keep going higher, not just here.
But the clear outperformer was Japan.
But everywhere.
Especially today, we saw new 5-year highs being hit in Japan on the Nikkei.
Does the individual investor believe it can last?
I think it'll continue to grow.
That's nonsense. One of these days it's going to crash.
I think you're going to see another dip, and then I might go in then.
Many have already gone in. Last quarter, E-Trade says customers bought $1.2 billion more in stocks than they sold. TD Ameritrade saw a 20% jump in net new assets. And Charles Schwab saw a 9% increase in new brokerage accounts from February to March. Seems everybody's positive.
It does worry you when everybody's positive.
Craig Rumberg is an individual investor who runs a staffing company, Cyberforce, which gives him a unique perspective on employment. So he's investing in things like healthcare and even airlines.
I try to tend to look at things that I can feel and see. So when I just took a flight, it was packed, and all these flights are packed.
But as global markets also rise, Germany's just hit a new record, managers of international funds are waiting for investors to pile in there too. Sammy Simnagard at Fidelity likes what's happening in Japan, and he also likes companies which cater to consumers in emerging markets.
There are a lot of European luxury companies that get 30, 40, 50% of their revenues from emerging market consumption.
It all sounds great, but Craig Rumberg says a lot of regular folks have a hard time believing it.
At this point, the market's rallied. But most of these people that I talk to that are regular average Joes haven't participated. Either they were scared or they're still recovering from the last crash.
He says the biggest challenge facing the market may not be fundamentals, but trust. For Nightly Business Report, Jane Wells, Los Angeles.
Well, John Sweeney has been busy these days talking to individual investors and reassuring them about what to do with their money. He's the Executive Vice President in charge of retirement and investment strategies at Fidelity Investments. John, the question and the dilemma, I'm sure you hear this all the time, is it too late to get in the markets? And then a pause, is it too risky to be in the markets? What do you tell your clients?
Right. We try and have customers understand the role of equities, particularly in their portfolios. So you remember that equities are the place where you want to outpace inflation. So we always want to have consumers understand how much equities they want to have in their portfolios. For young investors, that means they're going to have almost all of their portfolio in equities if they're saving for retirement that's 40 years in the future. But even for retirees, a 65-year-old should probably have about half of their retirement portfolio in stocks because they're trying to plan for a 30-year time horizon in which they're going to need to live off those investments.
But the nervousness about the markets and the direction and all that kind of stuff, there's still a lot of people who are putting money into bonds. Yes, a lot of money has been flowing into stock mutual funds, but still at a pretty good clip, they're going into bonds. And Warren Buffett just earlier this week was talking about investing in bonds. Let's take a listen. I'd like to get your reaction.
I like owning stocks. I do not like owning bonds now. There could be conditions under which we would own bonds, but there are conditions far different than what exists now. Bonds are priced artificially. You've got some guy buying $85 billion a month, and that will change at some point. And when it changes, people could lose a lot of money if they're in long-term bonds.
So, John, is Warren Buffett right about it? Is it too risky to be in bonds?
Well, he talks about the Fed's $85 billion purchases of bonds every quarter. And what you have there is you have, obviously, them trying to stimulate the economy. And what we've been waiting for several years now is that inflation to kick in. And so what we see is the Fed policy continuing over long periods of time. When it will happen, how quickly it will happen, and what impact it will have on rates remains to be seen. What you need to remember, though, is that bonds play an important role in a portfolio, A, as a diversifier, and B, as ballast against equities. You want to have the right proportion of bonds in your portfolio, depending on your age and your risk tolerance.
All right, let's talk a little bit about depending on your age. Let's say you're about to retire, or you're already or recently retired. You mentioned a moment ago 50% stocks. How do you divide up the rest?
Right. So you want to think about 40% bonds. If you're worried about the prospect of rising rates, you want to think about different types of bonds. Investment-grade corporate bonds offer a different risk profile, obviously, than government bonds. Shorter duration bonds, non-U.S. bonds, all offer different risk profiles. So you want to think about the mix and the different types of bonds that you could hold in your portfolio.
You know, one of the things that makes investors nervous, and you heard the story that Jane Wells just did, they're worried that the markets are rigged, they're worried it's risky, they're worried that another shoe will drop and markets will plunge. I'm sure you hear this all the time. What do you tell people?
Right. So remember risk. You're taking risk because you want to get a return. So when you invest in a company, you're looking for companies that are growing their earnings and really take business risk in order to grow earnings on your behalf. And you're going to have to trust that the management of those companies know what they're doing. If you're buying a mutual fund, you trust that the portfolio manager is picking companies that are growing earnings. They're all incented to make sure that their earnings continue to grow. And that's the place where you need to take some risk so that you can make sure that your money is growing for you and outpacing inflation.
What's your advice to investors in terms of if they have some money and they want to put it into the markets, buying a few stocks that they think are high-quality stocks versus going into a mutual fund? I know Fidelity runs a lot of funds, but I mean, generally speaking, which way are investors, especially nervous ones, better off?
Well, we certainly serve both investors who select their own securities plus investors who invest through mutual funds. The question is diversification. So you don't want to put your stocks in just a few names because we all know the history of companies that were once high flyers and have subsequently crashed. The great thing about an actively managed fund is you have a fund manager who's spending every waking hour looking at those earnings statements, looking and interviewing corporate CEOs, CFOs, and trying to make the best decisions on your behalf. So we talk about skill, will, and time. If you have the skill, you're disciplined enough to invest when the market's down and disciplined enough to sell when the stock reaches a target price, and you're willing to invest the time, great, go ahead and do that. If you're not willing to make those decisions, then let someone do it for you.
Good rule of thumb. Thanks so much, John. John Sweeney of Fidelity Investments.
Thanks, Susie.
A whole batch of earnings from corporate America to tell you about. That dominates our market focus today. Toyota's U.S. shares touched a new 52-week high, and profits tripled for the company's fiscal year, topping analyst estimates and even its own projections. Toyota expects U.S. sales to grow this year, helped by the drop in the value of the yen. Shares of Toyota up at $119.70, up more than 3% on the day.
Earnings and revenues at News Corp also came in above estimates. The company expects to complete its split into two companies near the end of June. News Corp shares fell about 1% to $31.86. That was in the regular session, and then they surged in after-hours trading.
Activision shares set a new 52-week high ahead of its earnings report today, and profits did rise 19% in the quarter on the debut of its StarCraft II game. But guidance was cautious because of concerns about the next generation of video game consoles and fewer subscribers to its World of Warcraft game. Shares of Activision closed at $15.26. That is up more than 2%, but then they lost ground after hours, dropping more than 5%, as you see on that chart. Wendy's profits down 83%, hurt by higher food costs and increased marketing expenses. Wendy's revenues improved a little bit, and the company raised its full-year profit estimates. But investors did sell off, shares falling more than 5.5% to close at $5.77.
And business is percolating at Green Mountain Coffee Roasters. It reported strong profits, raised guidance, and announced a new 5-year agreement with Starbucks. That deal expands the number of Starbucks products available on Green Mountain's Keurig platform beyond North America. Shares rose more than 1.5% to $59.48. Then they soared after hours, adding as much as 10%.
Delta Airlines is doing something it hasn't done in a decade, issuing a dividend. It's part of the company's plan to return more than $1 billion to shareholders over the next 3 years. Delta's board also approved a stock buyback program of $500 million. This comes as the airline works to reduce its debt and boost profits. And earlier today, I talked to Delta's CEO, Richard Anderson, and I began by asking him about the airline's financial performance.
We did it with really good revenue performance, extraordinary cost performance, and really good execution across our sales and operating plan.
Let's talk a little bit about how you have been able to do two critical things to the traveling public. One is boost your on-time performance. The other is reduce the number of complaints that have been reaching the Department of Transportation. What are you doing operationally to improve performance?
Well, the first thing is we want to run as close to a perfect airline as possible. No cancellations, and unless the weather gives us a problem, we want to run in the mid-90s with on-time performance. And second, we've incented all of our employees to put themselves in the shoes of our customers because, as our founder said, we have a responsibility over and above the price of the ticket. And we have made that ring true with our employees. They're doing a phenomenal job, and our customers are recognizing it.
Story in the Wall Street Journal today, a study from MIT indicating that one of the reasons the airline business is doing better financially is that you have reduced the number of flights, particularly to second and third tier markets. How has the reduction in the number of flights and in capacity helped you achieve better financial results?
Well, many of those markets were served by 50-seat regional jets, which at $100 a barrel fuel are uneconomic. So it's very basic. It's taking out uneconomic flying because many of those markets are what we call very thin markets. There just aren't that many passengers in those markets. And once the 50-seat jet becomes uneconomic because of fuel prices, it's imperative if we're going to be successful as an enterprise that we not subsidize that flying.
Let's talk a little bit about the international business. You're about to open a new $1.2 billion terminal at JFK Airport in New York. You've also expanded at your service at LaGuardia. How important is the international business to you right now? Obviously, a big new terminal is not something you're going to amortize over just 1 year, but are you concerned about how vigorous the economy is in Europe with respect to that new terminal?
Well, we actually plan long-term for a relatively mild GDP growth around the world, and we build our capacity and build our plan on that basis. At JFK, we'll have the premium facility at JFK, #1 carrier from New York across the transatlantic with our partners at KLM and Air France and Alitalia, and very quickly, Sir Richard Branson's Virgin Atlantic and Delta will be together in Terminal 4. So we're very optimistic about our positioning. It's an unrepeatable position strategically for us in JFK, and will be very successful for our share owners so we can raise that dividend one day.
Give us an update on the status of the deal between you and Virgin Atlantic. You're going to take a 49% stake in it. It is pending some antitrust approvals. Where does it stand?
Well, we have 4 levels of approval, the British government, the EU, DOT, and DOJ, and we're making good progress on all 4 fronts, and we expect to close by September.
Let's talk a little bit about one thing that has helped your revenue but hurts the traveling public in the pocketbook, and that is change fees. They've just been boosted industry-wide from generally $150 to $200 for making a change. How do you justify that?
Essentially, what the change fees do is prevent a situation where someone buys a ticket and then changes it over and over and over again, which in essence makes it an option on any flight, any day, on any seat. We can't run the airline that way. We've got to be pretty specific, just like hotels are and rental car companies, about wanting you to stick with your reservation.
Shares of Delta hit a 52-week high today. They closed at $18.66 a share, and the stock is up 67% over the past year.
Still ahead on the program, one hospital charges $320,000 for a procedure, another $20,000 for the same procedure. But will knowing about these price swings help drive down healthcare costs? First, let's take a look at how the international markets closed today.
Jeffrey Skilling, the disgraced former CEO of Enron, struck a deal with the Justice Department that could get him freed from federal prison in just 4 years. That is 10 years earlier than the sentence handed down at his 2006 conviction for fraud, conspiracy, and insider trading, crimes that contributed to the collapse of the Texas-based energy giant in 2001. A federal judge has to approve the agreement at a resentencing in June before he gets that early release. Scott Cohn has, of course, been following this story for years. Tell us how this came about, Scott.
Well, this was a classic negotiation. Remember that back in 2006, when this trial took place of Enron's Jeff Skilling and the late Ken Lay, the wounds from the dot-com bubble were still fresh. Judge Sim Lake in Houston sentenced Jeff Skilling to 24 years and 4 months in prison. A harsh sentence, one of the harshest of all times for white-collar crime. A federal appeals court in 2009 ruled that that sentence was too harsh and he should get more like 15 years. But the resentencing has been on hold because Skilling had a number of appeals that had to work through, including going to the U.S. Supreme Court, which sent it back to the Court of Appeals, which still upheld the conviction. Skilling wants some freedom. He's 59 years old. The government wants to be done with this case, and there's some $40 million in restitution that Skilling owed to the victims, but that all was tied up. Now all of this goes away. The money can be distributed. Skilling gets his freedom. The 19 convictions for fraud, conspiracy, and insider trading stand. Skilling can't appeal them anymore.
You know, Scott, what is just amazing and was surprising to hear this decision is that we've seen before other convicted, high-profile CEOs not having any success in getting, time off. There's Alan Stanford. There was Dennis Kozlowski of Tyco. What did Skilling do that they didn't do and that he got this time off?
Well, one of the issues is that the case against Skilling had flaws, and the appeals court mentioned that. The Supreme Court, as I said, kicked it back. And so he had a little bit of leverage here. He was set to go to the district court, the judge who sentenced him, and say there was misconduct by the Enron task force, the elite Justice Department team of prosecutors that handled this case. That would have opened up a whole new can of worms, more appeals, potentially a new trial, and everyone has just decided now, let's get on with life. Is getting the judge's approval in this case a foregone conclusion, or is that really remaining a hurdle? It is a hurdle. Remember, the judge handed down a very harsh sentence to begin with. He still does have to, it's the same judge, still has to approve this deal. Now, he's been aware of the negotiations that have been going on. He's been holding conference calls with the defense attorneys and the prosecutors, but that doesn't mean he's signed off on it. It will now be up to him, and the sentencing will take place on June 21st, and we'll see. All right, Scott Cohn, thank you very much. Okay.
The overhaul of the nation's healthcare system has focused a bright spotlight on what hospitals charge insurers, Medicare, and patients who don't have any medical coverage for certain procedures. And the results are startling. The data shows different hospitals often charge vastly different prices for the same procedures. Hampton Pearson has more on the massive discrepancies in cost and how they may impact your premiums.
Call it hospital sticker shock. First time ever government data on the huge gaps in hospital charges for the same procedures nationwide. 2011 data on what 3,300 hospitals billed Medicare for the 100 most common procedures, all now in a massive database that consumers can access. No comment from the hospital industry, but the Obama administration says it's the kind of transparency that could be a game changer when it comes to lowering hospital costs.
The history of marketplaces is that transparent marketplaces are more competitive, and more competitive marketplaces drive down cost, and that's certainly the hope here.
A few examples. A hip replacement costs $321,000 at a medical center in Upland, Pennsylvania, but just over $20,000 at an Akron, Ohio orthopedic facility. Treating a heart attack costs $210,000 at a medical center in Pennington, New York, but just under $7,100 at the Huron Medical Center in Bad Axe, Michigan. The bill for gallbladder surgery topped $150,000 at a medical center in Bayonne, New Jersey, but just over $5,100 at a hospital in Danville, Arkansas. Most patients don't get hit with the full bill because they're paid by either government or private insurance, who negotiate lower payments. But those wide-ranging costs are reflected in premiums.
The data is very clear. Premiums track directly with the underlying cost of medical care. So as the cost of providing care increases, as the prices increase, that's having a direct impact on what consumers and employers are paying for health care services.
The government sees businesses and consumers using the information to make better choices and put pressure on hospitals to lower costs. For Nightly Business Report, I'm Hampton Pearson in Washington.
Also on the medical front today, a new test is now available that can help distinguish between aggressive forms of prostate cancer and less threatening ones. The hope is the test could significantly increase the number of men who would monitor their tumor rather than undergo surgery or radiation. Shares of Genomic Health, the company that makes the test, rose more than 6% today. And coming up, we'll take you inside a computer lab where the new war against cyber terrorism is being waged. But first, take a look now at how commodities, treasuries, and currencies fared today.
On Capitol Hill today, computer hacking in the spotlight. A Senate committee looked at the growing threat of sophisticated computer hacking attacks on corporations and government agencies, sometimes at the hands of China's military. Now, one company in upstate New York is at the forefront of the new cyber battlefield, tracking down and stopping those violations. Eamon Javers has more.
On the front lines of the cyber war, things look much different than U.S. military veterans are used to. Just ask former U.S. Major General David Fasteman.
Unlike most of my experience in the military, where I had a clear technical advantage, there's lots of us in the United States that, compared to the people that are coming at us, don't have so much of a technical advantage.
In the Army, Fasteman, who now oversees advanced information systems for defense contracting firm Excelis, always had the upper hand when it came to technology and manpower. But in cyberspace, that's not always the case. Under-equipped corporate IT departments can find themselves tangling with elite Chinese Army units, probing every nook and cranny of the U.S. defense and industrial base.
You find you have an adversary that is adapting very, very quickly.
And that's forcing the United States to adapt quickly, too. On Monday, for the first time, the Pentagon made it clear what many in the U.S. government had only discussed obliquely before. The U.S. government is being raided by hackers working for the Chinese military.
China's military continues to explore the role of military operations in cyberspace as a feature of modern warfare.
The struggle between hackers and their targets is playing out inside defense companies and technology firms all across the country, but not all of them will have the kind of robust capability that you'll see here inside Excelis' Rome, New York Cyber Incident Response Center. The firm's analysts pour through inbound cyber attacks to isolate and understand the constantly evolving malware trying to penetrate their systems. And for all of that, Axcelis cybersecurity analyst Vernon McCandlish says he has a grudging respect for the adversary he tangles with each day.
What really surprises me about it is the creativity that they come at you with. It's one of those things where we will sometimes sit there and go, that's really cool. It's evil, but it's cool.
For Nightly Business Report, I'm Eamon Javers in Rome, New York.
A recent report from Symantec says targeted attacks were up 42% last year. Now, 1/3 of them were aimed at U.S. manufacturing and small businesses.
And finally tonight, the number of the day for all you Sesame Street fans is $121 billion. That, according to a new study, was the total cost of traffic congestion in America in 2011, the last year for which it was measured. It works out to $818 per commuter. So which city has the slowest of the slow jams? According to INRIX, a traffic information group, the winner or loser is Los Angeles. Based on INRIX's measure, Los Angeles led the nation, or trailed it, with a traffic index of 28.8. That means it takes 28.8% more time to make a trip during peak hours in LA than when there is no traffic. Last year's title holder was Honolulu. It finished second. This time, San Francisco, Austin, and New York City round out the top 5. And last year, Susie, the average American spent 38 hours sitting in traffic. That's a work week.
I was going to say, yeah, that's a couple of days.
You know, one of the cities that is cropped up on this list was Bridgeport, Connecticut. I would never have guessed it was in the top 10.
I would have put Washington, D.C. Beltway traffic.
It was, I think, number 6, Washington, D.C. And it's gotten worse in Washington, D.C., my hometown.
That's it for us. Nightly Business Report for tonight. I'm Susie Garrett. Thanks so much for joining us.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody, and we hope to see you back here tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
I'm Susie Garrett with a Nightly Business Report news brief. Modest gains on Wall Street today were enough to send the Dow and the S&P 500 to fresh all-time highs. The Dow was up 49 points, the Nasdaq added 16, the S&P gained 6 points. Mortgage applications rose 7% last week, and late mortgage payments fell 21% in the first quarter of the year, the biggest decline on record. The former CEO of Enron has brokered a deal that could cut 10 years off his prison sentence for fraud, conspiracy, and insider trading. Coca-Cola is launching a new anti-obesity initiative that features smaller soda bottles and more low-calorie offerings. And a new survey shows Los Angeles has the worst traffic of any American city. Honolulu, which won that title last year, falls to second place. Be sure to tune in to Nightly Business Report right here on your public television station.